Good evening. Welcome to the ShadowTrader video weekly for Sunday, December 2nd, 2012. As the market has run up quite a bit over the last week and a half or so, I thought this would be a good opportunity to revisit ratio spreads and show a couple of trade ideas for next week where a ratio spread may be employed. The S&P has moved pretty hard up off the 61.8 retracement level and is now sitting right at a 50-period moving average resistance. I'll just quickly flip through the couple of the other majors. Dow Jones is still well below the 50, but notice that the prior lows here are stopping it for now, and Nasdaq Composite is also sitting just underneath the 50. So I was thinking that this might be a good time to revisit the ratio spreads because it's really kind of an alternative type of strategy, a little bit more esoteric. I've done some pieces on this before. And I thought I'd revisit it now because I felt that it made sense in an environment where the S&P has already traveled pretty far in one direction, has some resistance ahead, and the thought out there is, okay, where would I get in here since it's already gone too far? So can I create some sort of an option strategy where I can kind of profit either way? If we stay flat, I would profit. If we fall, I profit. And if we move up a little more from here, then it could be, kind of a big win. So right off the bat, the ones that come to mind are the more expensive stocks, such as Apple, Priceline, Google, et cetera, et cetera. So I'm going to show you two examples for this coming week. And they're both interesting because one actually trades for a debit and one trades for a credit. And so the first one is going to be Amazon. And Amazon is currently running into some resistance here at the 256 area. So the idea with the ratio spread is to try to capture price action that would be right up into this resistance area, but would not go further, and preferably for a credit. The Amazon one actually trades for a slight debit for the spread I worked out. I'm looking at here like a resistance here of about 256. Currently stock's trading 252. So if you click to your Analyze tab, right, you can see here that I have a buy 5, sell 10 of the 250, 255 call, right? So for every 250 that you're buying, you're selling two 255s, and this can be done in any size you want, 10 by 20, 50 by 100, whatever, depending on your account size and your risk. So they're really easy to set up. You just right click on the lower strike, and in this case, you would be selling ratio, right? Because you're selling the ones in the back, and go like that, and it'll automatically just default to the next strike. So here I'm showing two examples actually, and this is actually quite interesting in that the 250 255, right, is selling for a 45-cent debit, and the 255 260 is also selling for about a 45-cent debit. So there's kind of two ways you can structure this here, all right? And basically, I purposely chose this one because it is a debit, because those of you that are new to these spreads, I thought it would be interesting if you have one on that's a debit and you have one on that's a credit, then you can watch them each day and watch the Greeks in your monitor tab and see how they react to the price of the stock and come to a conclusion as to which is better, putting it on for a small debit or putting it on for a small credit. So essentially, either one of these, let's say if you took the lower one, you would be long the 255s, or long the 250s, excuse me, and short the 255s with maximum profit at 255. All right, another one that I'm looking at here is Priceline, and I purposely drew a resistance line right in here where there was a double top before the stock sold off, and that high is 695.15 here and 692.25. So I know that it's about at the 695 area where I think the stock would come into some trouble. So if you look at Priceline, for next week, expiring in a week, the 690-695 ratio is $1 credit. So you would actually receive money for getting that. And let's put on another one higher up and see what that comes up to. Let's look at the 700-705. That's a 50-cent credit, which is a little bit safer, right? Because the stock would actually have to go through resistance to get to either of the strikes, right? But you're not receiving as much of a credit, obviously, because there's less risk there, okay? So check these out next week. And again, if you're new to it, you can try it with small size. And the key really, though, once you put it on, regardless of your size, is to watch the Greeks and the P&L very closely. And that will probably give you a good idea if this type of spread is for you. These spreads tend to react very, very favorably And I find that they're actually good for novices because, very often you'll put it on for a credit, take it off for a credit. A lot of times the stock goes nowhere, you keep a credit. So there's multiple ways to win, which I think is really cool. All right, now if this is put on early in the week and either of these stocks rocket hard to the upside, okay, that's the single most negative thing that can happen to the spread. Basically, you want the stock to slowly go towards where the short strikes are, but you don't want it to happen too fast. So if it happens too fast and you get nervous, remember, they call them options for a reason. You have lots of options. There's a number of things you can do. First thing that always comes to mind to me is that any ratio spread can be turned into a straight butterfly, right? If I'm long the 690, short the 695s, I can just buy the 700s. And on the weeklies, if there's only a few days left and the stock is not, still has some room to move before it gets there, it probably won't be too expensive. Maybe it would be the same amount of the credit that you bought in. In this case, perhaps, you might be able to buy the 700s for $1 at that point, right? I mean, right now they're trading 110 by 130, but we've got 6 days left, all right? Another thing that comes to mind to adjust it is that, remember, you have one long vertical plus one extra short. So that long vertical has a lot of value and can have a lot of intrinsic value. There's possibility that on Thursday, when the next series of options comes out, right? Like here you have the December 1 weeklies expiring in 6 days, and then the next series here is the December monthlies. However, Thursday of next week, right, there'll be another December weekly that'll come up here, and there's possibility that you can take one of the shorts and roll it further out because there's a lot of time value. So let's say maybe you're short here, like the 705s. Well, you might be able to roll the 705 out to next week to, let's say, 725, 730, wherever there's still credit in the chain, because there's going to be a lot of days left. Like on that Thursday, you'll still have 8 trading days left in the new cycle, right? And then now you've got a short option out there for next week, but you've got a long vertical in this week that could be worth $5, and that's huge. So you can kind of do it like that, let the stock move right through the long vertical and, manage to trade that way. All right. So a couple of interesting trade ideas, I think, for next week. If you want a little more of a starting point on the ratio spreads, kind of like a primer, I do have an article on ShadowTrader.net in the blog. Just go to the website here and click on blog. And once you're in the blog, you'll want to go on categories like this and click on educational articles. And this was a gentleman who wrote me a question a while ago about ratio spreads that I had talked about then. And there's, some good example here on the price line trade and a little bit of write-up there. All right. So take care. That's all I have for now. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.